Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and we're so happy you could join us on this afternoon or morning or whatever you're doing on YouTube or Rumble. Thanks for taking the time to listen to some news and information about the precious metals market. The week that was, it was really a spectacular week, Jerry, and as someone who's been in the market for over 15 years, I'm very hesitant about the enjoyment of it, to be honest. Of course, look, we were just before we jumped on, we saw a post where gold is up 50% against the US dollar, or the US dollar's lost 50% against gold in the last 4 years. That's not a good look on the US dollar. The post went on to say you're living in a third world country, which, there's this comedian in the UK, Katie Hopkins, and she has a daily update on batshit bonkers Britain.
Yeah.
And I was trying to figure out what do we call Canada? So I just looked up on ChatGPT. So I want to, before we jump into the metals market, I want to get your thoughts on what we should be calling Canada. What do you think of Crazy Clown Show Canada?
Crazy Clown Show Carney's Canada, absolutely.
Ooh, yeah. How about Clueless Coddled Canada?
I like that one. Coddled.
Yeah. Crooked Crony Canada?
Yep.
Yeah. Let's see, what else?
They're all ringing a bell.
Crazy Corrupt Canada, Crumbling Clueless Canada. I kind of like that one. That one kind of rings with me. Crumbling Clueless.
I think they have a clue. It's part of the plan.
Crooked and Careless.
That's a good one.
Because look, the fact is that one of the things we're going to talk about today is the fact that you're seeing more and more sovereign wealth funds acquiring gold, and we've got a story about the ETFs and gold, follow-up to our story last week about Saudi Arabia and gold, and silver, I should say. So you're seeing more of these things. We're going to talk about it a little bit further, but what you're not seeing is Canada acquiring gold. Instead, what you're actually seeing is Canada selling gold at an amount that is extraordinary and not being fully reported. Mm-hmm. Tell us about that, Jerry.
I was reading an article about the Canadian dollar this week, just finding out, how the dollar's been performing this past week. There was a miss. Our second quarter GDP was a miss. However, the Canadian dollar, for whatever reason, versus the US dollar has been quite buoyant. So you had some analysis that came out from National Bank, which they estimated that Canada's trade surplus in gold, so it wasn't really oil related to the loonie. They're actually attributing the Canadian dollar's buoyancy to its trade surplus in gold, exporting it and selling it to the buyers. So yes, we are huge exporters of gold here in Canada, but how they attributed the sales, the surplus in sales to the loonie was a head scratcher for me. But if we dig into the numbers, they don't really report all that much exporting to Asia, all that much. Some to Hong Kong, but obviously to the U.S. But then we had some reporting coming out from Vince Lancy that talked about Canada's gold exports. It goes, China has quietly placed Canadian gold at the top of its import ledger, with official customs data valuing bullion inflows from Canada at more than 10 times the level reported by Canadian authorities. Why would Canada be so secretive with its exports to China, Jeremy?
And where are they getting the exports from? Right? They're clearly not selling off the central bank's reserves. That's already been sold off.
Yeah, it's a good reminder. Canada has zero gold reserves.
So what is it? Just coming from mining?
That's correct.
So rather than helping make Canadians richer, we're going to send 10 times the amount to China, who has tariffs on canola, right? And right. Other things. And we're not taking any Chinese goods off the shelves. Instead, we're just shipping them all our gold.
And that's what's happening. And if you look at the mining giants around the world, China is the mining giant. But one thing they do not do for national security purposes is export their gold. They hoard it, they keep it, and they keep it for their SWFs, the strategic wealth funds. Canada has no gold reserves. Canada is not doing anything for its people, creating reserves that can be revalued, that could be used for collateral. Canada is just a clown show. And why underreport? Why would it not be popular?
Well, they're not reporting anything, Jerry. They don't report where they send the money. They don't report on their budget. It's like you had a downward decline with Trudeau, and then it fell off a cliff with Carney, and people just want to keep giving the guy rope, right? It's rope to hang our country. And ultimately, you're on your own here.
Yeah.
You are on your own. And if you want to protect the dollar, the purchasing power of your own purchasing power, forget saying purchasing power of the dollar, your purchasing power. You need to have physical gold and silver. And thank goodness gold and silver are rocketing right now. And they are nowhere near tops. Nowhere near tops. You know, when I started in the business, it was, here's the story. Maybe one day silver will break $50, like get back to $50. It's still under its all-time 1980 high.
Right.
Okay. Not by far, not by much. You know, we said last year, Jerry, when the price was in the 20s, we said, look, if it can get to 27, 28, the market psychology, they'll feel it's inevitable. It'll break 30. Then we go, and then this year was the 30s. And I said to clients, I said, look, once you get to $38 an ounce, it'll feel inevitable that we break 40. Now, once you get to 40, you're not waiting for $48 to feel like it's inevitable it's going to break 50. Instead, it already feels inevitable it's going to break 50. The question is where does it go from there? Now, here's where it gets crazy exciting, Jerry, because I was just reminded today on a Zoom call with a client, and I was showing them a chart that in 2008, the ratio of silver to gold was 80-1. After silver had come down from $21 down to like $10, $12. And we were trading at 80-1. And from there, it fell to 35-1, and silver goes on a run from $12 to $48. But the ratio right now is 85-1.
Right.
And we're up 40% year to date. We're up 40% year to date. The price of silver is trading at an 85-1 ratio against gold. Silver's starting to take the lead in the bull market. We're in a 3, 4, 5 year deficit again.
That's right.
This is looking very, very positive. So when I hear numbers of analysts calling for $70 silver potentially this year, because Michael Oliver isn't the only analyst calling for that. It does get pretty exciting.
You know what made
But I have to temper those excitement because I've seen what they can do in the past. So here's my question to you. First, the number 18778 silver, the website guildhallwealth.com. Hold physical gold and silver in your portfolio. Don't hold paper, pool accounts, anything that you can't go and personally hold in your hand, that you can't go and audit and know that this is your product, whether it's being stored at Brinks or if you take it home, for instance. If you can't hold it, you don't own it. This is not the time to be inviting counterparty risk. I'm seeing flashes in the stock market. You know, people are putting out, hey, all these insiders are selling. I saw a post that Michael Burry, who's Bridgewater, Ray Dalio, and others have sold all of their portfolio. Things are looking very strange because I don't even feel that kind of pessimism towards the stock market. But nonetheless, take care of yourselves.
Absolutely.
Take care of yourselves. Protect your purchasing power. Hold some physical gold and silver. We like the registered accounts. You might need your day-to-day cash, but you've got your retirement account. Protect that. Protect your family. Hold some physical metal. So, Jerry, I want to ask you again. I'm tempered with my expectations. So, is that warranted? Do you see a potential of a paper slam in the market? Do you see tomfoolery happening? Are we in a different type of market? Is this more solid than we were, say, in 2010-11, where we go on a $30 run in 10 months?
No, I don't see. I mean, you can definitely have an off day or two, a pullback, which is totally healthy, and it is warranted to have some pullbacks in the market, like we're seeing today, some profit taking in the silver space and the precious metal space altogether. But with all of the trends that we're following and the prospects of further bull runs, yeah, both gold and silver are both up on average 40% on the year to date. The consecutive sessions that we've had on updates, for instance, the longest winning streak we just had since March of this year, we rose in gold 8 straight sessions. That is huge in terms of the momentum that we're seeing in the market. Gold is now holding above 3,500 an ounce. Silver, I think a good support level would be 39.50. We're up over mid 40s right now, a little pullback from 49.22 in the last couple days. But we have rate cuts coming up. The big news ticker this week, we have jobs data coming out of the States. We had a huge miss today already, non-farm payrolls.
Yep.
If we have a huge miss tomorrow, there could be warranted for a 50 basis point jumbo rate cut from the Federal Reserve. We have shifts moving in the Federal Reserve. We had Senate just interviewing some of the Fed governors that are getting nominated. One of them is Stephen Moran. We talked about him last week regarding the Mar-a-Lago Accord. He will be the architect of the Federal Reserve's reset. So knowing that there could be potential pullbacks, I think we just have to be like India right now. Over the last year, we just saw India, regardless of price, which is very much unlike India. India loves to buy on dips when it's cheap. No, this year we saw consecutive buying. They were not dollar cost averaging. And I think that's a huge message for investors. We always like to pick the bottom and try to buy on the dip, set the alerts if you want to. But right now, the biggest move is going to happen in precious metals. The 85-to-1 silver to gold ratio tells us that although gold is up 36%, silver up 41%, this market hasn't even broken out yet.
The number, again, 18778 silver, the website, guildhallwealth.com. What I'm hearing from you, Jerry, is that the participants in the market have changed the way they're acquiring metals and their approach to the metals. And I want to stick with that. And I also want to stick with I want to talk a little bit about the technical side of things like the Comex, and see, just to test our theories there of how strong this market is. So let's get into that in the next segment, that and much, much more. The number again, 18778 silver, the website, guildhallwealth.com. Guildhall helps you acquire physical gold and silver. That means that if you can't hold it, you don't own it. That's our motto. And this is the way you're going to protect your purchasing power and take advantage of a massive bull market in precious metals, which isn't just to protect against devaluing currencies, etc., but it's about going forward and the new monetary reset that we see coming. So let's keep rolling with the changes that we're seeing in the market in terms of the strength of the bull. Because when you think about bull markets, you think about, okay, there's going to be a lot of ups and downs. The whole point is to try to knock you off. And you were mentioning in the last segment, India's not waiting for dips. Their appetite has increased to the point where they're saying, I need it. Is that part of the strategic metal narrative? Maybe they see it as a strategic metal, and so they're saying, look, we need to get our hands on it. Is it that they knew the U.S. was going to call it a strategic metal, so they're saying, we better get it now before the gate closes on the U.S.? Talk to us a little bit about that.
You know what? We've been talking about that, having silver included on the critical minerals list, not just in the U.S., but especially here in Canada, knowing that we are a huge mining nation for silver here in Canada. But I believe that the move towards silver, especially seeing how Russia added silver to its monetary reserves, silver is normally known for its industrial attributes and for use in industries from pretty much everything. But seeing how a country like Russia has added it to monetary reserves, we're seeing this reclassification of silver, and probably a signal that this would have happened. Seeing the U.S. government recently last week, the Department of Interior has proposed to classify silver and platinum among the list of other metals as strategic commodities and minerals. That this is a race. The race is now on. They have called it out. The importance of silver is now general public, and the race is on to secure this asset for national security reasons. It is deemed a critical mineral for many reasons because of it. Silver is very unique in that it straddles both industrial and monetary roles, and it's just being used up. We saw 5 years straight of structural deficits coming out of the ground. The mining is slowing down. You can't get new mines up and running that quickly. So seeing how, the countries were moving into silver prior to this, again, you just follow the trends, follow the smart money, because it always leads to the actual physical asset. They're not really going into it for any other purpose. Could be currency depreciation and diversification of assets. We're noticing that gold has replaced treasuries as the number one held asset for these countries.
But the shift here that I'm seeing is that even thinking about doing the Real Money show, say 5 years ago, you go, what do you want to talk about this week?
Yeah.
And you'd say, well, what's going on? And and we're just talking about all our clients, and you guys know you were listening to articles about that people writing articles pontificate about the reasons why you should own it, and all of these things. And now it's like, okay, India's got a voracious appetite. Saudi Arabia puts 20 million into a silver ETF. Russia wants it as part of their reserves. Comex, getting to that part of it, Comex is they're all slated for delivery. It's not let's roll over these contracts. It's we want delivery out of this system. You see all of this metal all of a sudden being available for delivery, and they're taking it. They're using it as a place to get delivery.
Right.
Did I mention critical metals list? So there's, and then all of the new technologies that we've talked about over the last little while. New batteries and new nuclear energy things. It all just kind of leads to this new narrative on metals that says, oh yeah, well, we were telling everyone this is a great thing. Listen to the story. Look at all the usages for silver. Remember a decade ago? Remember, look at all these usages. And now it's sort of like, hey, everybody understands the story and everyone's vying for this metal. And no one's sitting there going, well, I'll wait for a dip. No. So I guess we still have to be maybe aware that, okay, the 200-day moving average, I assume, is probably somewhere around 33, maybe 34 at this point. So anything could happen in markets at any time, but will it matter in the long term? Right? Think about 2021.
Right.
Silver goes from, what was it, $20 down to $10, or was it like $22 down to $10. The ratio went to 130.
Right.
And within a couple months, the price of silver was trading over $34 an ounce. So I guess in some ways, we want volatility. It can push the market higher and also when it went to that level, which was so low, you couldn't actually buy it. It was low on paper, but you couldn't actually get your hands on any. And I remember opening my Questrade account and just thinking, if I buy it, I'm buying it at the price anyway, so it doesn't matter if my portfolio looks like it's down. So here we are, bull market in precious metals. I assume this is confirmed. Do you think a lot of this is just front-running the Fed and lower interest rates?
You know what? That is partly the reason why we're seeing. I believe that the Federal Reserve interest rate cuts are going to be coming. They have a lot of debt that needs to be rolled over, and they cannot do it at higher interest rates at 4% plus. So they're going to have to lower these rates and refinance a lot of that debt. But the thing is, I think we've already priced in a cut. a 25 basis point cut next week or two. But if it's a 50, watch out. The silver and gold are going to rocket higher like they have done in the last 2 weeks. It will continue to run higher. I think silver will likely want to touch that $48 level. The momentum in the last 2 days has been just crazy on silver. $1 move per day. We haven't seen that in a long time. This is a 14-year high that we're seeing in silver, and we're just a few dollars away from all-time high. And when you see it break the all-time high, silver is just going to, pierce through $10 at a time, $10 at a time.
Wow.
So I do think that the volatility is good. You want to kind of try to buy on dips if you can. But we're seeing a little tightness on the physical side. You want to ensure that you're getting the physical. The run is for physical. Although we saw entities like Saudi Arabia, countries like Saudi Arabia, and there's a huge entity that bought a lot of GLD last week, over 100 times the average of GLD. I believe the move is to corner these massive ETFs that hold some physical in there, because if you have enough a position in those, you control that. You control that physical.
I actually wouldn't be surprised, given what J.P. Morgan did in 2021, where they adjusted the paperwork on like the
prospectus.
The prospectus. Thank you, appreciate that. I wouldn't be surprised. Now, if they came out and they said we're limiting the size of orders, that's your telltale.
Yeah.
That tells you that these guys who are trying to, why are you buying this much of an ETF and why are you not just buying the physical? It could be because you plan on taking delivery. Because if you're a client of a certain size of an ETF, you can take delivery, right? So,
and
also when you do invest in those things, your trade platform gives you the option to leverage it or not.
Right.
And if you close off that leverage, it means the banks can't borrow it.
That's a key.
I know at Questrade they give you that option right away, right? When you're opening the account.
Do you want to trade options?
Do you want to trade options? And you click that off, and I'm pretty sure that means that none of this can be optioned.
Right.
That's an interesting thing. So maybe if you're buying into the ETF and you're saying, nope, I don't want my shares optioned in any way, you can't borrow these for your own purposes, Mr. Bank, then that's also a very good, strong signal for the market, because that's saying this market is getting the leverage. I guess it's one thing to talk about momentum. It's another thing to talk about leverage. The leverage appears to be on our side as well.
Yeah, absolutely. And the leverage is definitely on our side. Remember what they are. They're just derivatives. It's based on your asset that is being used as collateral over and over again. This is the reason why we've been in this mess for such a long time. It's a fractional reserve system. So now it's time to make things whole again, get delivery of your product, own it one for one, ensure that the product is either in your hands, or if you have it in a vault, that it's in your name, that you have title ownership and you have the ability to go visit and audit those goods, audit that product, because one of these days you're going to want to take delivery of that. Because just this week I had a RIF client that, they have income in, various other means. They have income coming in, income properties and whatnot. And it was time to take a RIF withdrawal. And it was a sizable amount. It was about $13,000 for the year. And they didn't want to sell the gold off. So we put together a RIF withdrawal of $13,000 worth of their gold to be delivered. And they're able to sell whenever they want to sell and participate in the coming appreciation and the move in gold and silver. And the move, I believe, is going to be multiple times higher in both metals. So you do not want to forfeit this opportunity. You want to hold on to the metals, get away from depreciating currencies, get away from fiat altogether. This is not the time to do it, because we know the cuts are coming. The helicopter money's on the way, which only spells stagflation. And there's only two good assets that hold their value and perform during stagflation. You got to have physical gold and silver for that purpose.
The number 18778 silver, the website guildhallwealth.com. And to add to that with your LIF withdrawal, Jerry, clients take in-kind withdrawals and they'll they'll have it withdrawn and then deposited or transferred to a TFSA. Or they could have it withdrawn and transferred to a depository account, or just take delivery. The point is that if you don't need the funds, And as you said with your client, the fact is you can take the product and be able to stay in the market. And I think that that's a brilliant thing about this investment vehicle that we're using to hold physical product that's you own. It's an actual asset that you can hold in your hand, but it's held in a vault outside the banking system.
Right.
Which is a safe place to be right now. As things are changing. We've talked about this in the past, that things are changing and crypto could be the future. Most likely is. It's a digital age, but gold is the bridge. And behind every great computer is an outlet. And behind that outlet is a bunch of cables.
Bunch of stuff.
And the world runs on that stuff. Because until we are just meditating our way to prosperity and everything like that, the world runs in real atoms that collect in things. And that includes things that are on the table of elements like gold and silver. So that's why we're saying, what a great concept. Why not own some of these things and profit on the fact that they're in a bull market, and silver could go to 70 this year, and more people are talking about triple digits for silver. And it doesn't have to be the end-all be-all of your portfolio, but certainly having some in your portfolio could be a great way to diversify and balance and just do what central banks are doing.
100%.
If it's good enough for them to do, why isn't it good enough for you to do? Maybe something to think about there as we go to break. The number 18778-SILVER, the website guildhallwealth.com. Jerry, in the last segment, you mentioned that a client had a LIF account, didn't need the funds as income, and so they took delivery of the product, which is always really cool that we can do that. And as the value of gold and silver continue to increase this year, up 40%, not even year over year, 40% since the year started, that means that the percentage of gold and silver in your portfolio is continuing to increase. And over time, your wealth is increasing, and hopefully the other portions of your portfolio are doing just as well. It's great when precious metals are a hedge. It's even better when you're doing well and they're performing too, and you're increasing your overall wealth. As that percentage of your portfolio continues to grow and grow and grow, and you think about an exit plan, what do you do with the newfound wealth that you have? Some people might decide, I'm going to start a business. Some people might decide, I'm going to give my kids some money. Maybe I'll buy some property. Maybe Canadian property will be distressed and it'll be perfect timing. Who knows? Maybe it won't even matter. Right. That's how well you may have done by holding significant amount of precious metals. Another thing you might start to think about is legacy building. And you can do that with a natural fancy color diamond. Absolutely. There's no better way of not only rounding out your portfolio with a natural fancy color diamond from Guildhall, which are among the rarest, yet affordable. It's a very easy way of adding legacy to your hard asset portfolio. These stones are uniquely rare. They're just incredibly beautiful. But there is no better way of rounding out that portfolio because we are in a place where we need to protect against depreciating currencies. And a natural fancy color diamond, because of its rarity, it moves in the opposite direction of that depreciating currency. So it does do what the metals do, and it moves up in value, especially when you have all this talk about the derivatives going bust, toxic derivatives, quadrillions, that can take down the financial system. That's what Warren Buffett calls the financial weapon of mass destruction. This is the best way of creating a strategic wealth reserve for yourself, but reward yourself for a job well done. Clients are up over 100% on their portfolios in precious metals. I'm so happy and pleased. And this is where people are looking to not only round out that portfolio, but continue the growth and pass something on for your next generations, something that is so easy to do and very concentrated. You can literally travel around the world with this asset and still have value in any major currency, any major language around the world.
These are notorious for doing just that. Notorious because the wealthy families have done it over the generations, and all we want to do is replicate. We always say, become your own central bank. Just become a generational wealth builder, a legacy builder for yourself and your family. There's no better way because they can't go bankrupt. Your governments may go bankrupt. Your stocks may go to zero, but these assets will last forever.
Yeah, you wonder why people are spending tens of millions of dollars on a ring at auction, and it's because they have the house, they've got the cash, and there's only so much you can put into the stock market where you're putting it at risk. But when you have an asset like this, it becomes something that you can enjoy, your spouse can enjoy, or you're enjoying for yourself, and it's something that can be passed down and not only have sentimental value, but also have economic value as well, and economic power. You know, at Guildhall, we only focus on natural fancy colored diamonds that have the highest quality, and the higher the quality you go, the more rare it becomes. So if you're looking at something like a yellow diamond, there's a fancy grade. You could have fancy light, you could have fancy dark, you can go to intense. The strongest color is going to be vivid. That's going to be the most rare. Now, if you move up the clarity scale from SI or VVS or VS, which is where your retail stores are going to be, VS quality, from VS to VVS, and then you arrive at internally flawless. Very, very rare to have an internally flawless. And you want something of a certain size. Now, 1 carat vivid yellow diamonds, about 50 a year will come to market. Now, that's not saying that the diamond isn't deep or it's shallow or that the rectangle looks skinny. It just says this is a 1 carat 1 carat vivid, internally flawless. It doesn't say that it sparkles and is great. It just says 50 that match that criteria come to market. We go after ones that we want to own because we buy them first and it's in our collection first. And diamonds like that represent 0.001% of all of the diamonds that are out there. That is a 1 in a million chance to find something like what we have at Guildhall. And there are diamonds, by the way, that we have that I have never seen before or since we acquired. Mm-hmm. Something like a 2.8 intense, internally flawless princess cut. This thing is like an ice rink of glitter, and it's just beautiful to look at. And we just had it put into a ring.
Phenomenal.
And I couldn't let go of it. I couldn't stop looking at it, and I couldn't let go of the ring. It was like when I chose the diamond for my wife, and it was the way the diamond chooses you. Mm-hmm. And it was so crazy, Jerry, because I fell in love with this diamond all over again.
Wow.
Because I remember being part of the purchasing process of it. So I'm so glad we did that. We're going to get the video made. We're going to get the pictures made so that everyone can see it. But these are the type of things that we are looking for in a natural fancy colored diamond. And this is the type of asset that you want to hold for generations. Now, they continue to rise, and there's always a secondary market available for these things. And if you've held something long enough, there's money there. Mm-hmm. There's money. And it's a great market to be a part of. And it's, when you think about the crash in 87 in the stock market, the dot-com bubble, the subprime crisis, whatever lays ahead, colored diamonds just kept going higher and higher and higher.
Yeah. What I've learned over the last 12 years was the strategy and going after rarity. And I've only seen people win in this market. I've only seen success because we understand that we're going after rarity and we're going after generational wealth building. I know that the listeners, there's a lot to unpack in the last, minute with how you described what we go after in terms of the 4 C's, which is why I really encourage, if you're looking for something that offers a rare, a low correlation asset that will appreciate or hold its value during these upcoming, whatever it may be, crises, crashes. Since 2002, they've been a trusted safe haven for all of our clients. It's a huge investment opportunity. If you're looking to acquire or find out more beyond just this radio segment, request the guide. Get in touch. and contact us to book your own diamond discovery session. That's the best way to find out if this is a right asset for you, if the diamond chooses you. Like Jeremy's experience, I think that was an amazing, beautiful experience, and I've seen that before. I've seen diamonds choose my clients, and even settings, having that ability to put this into a setting which we can help you customize a unique setting for your loved ones, for yourself, reward yourself, and you can find out more. Just get in touch and we'll show you how it's done.
The number 18778-SILVER, the website guildhallwealth.com. Jerry, where do we go from here? Let's wrap up. I mean, it's been a great year so far. We're here in September. We're imminently expecting perhaps a rate cut, and but there is sometimes pullbacks in end of September, October. What do you see in the rest of the year?
Why not? You could have a pullback here or there, but ultimately the trend is higher for precious metals. We are excited, but really we haven't seen anything yet. For people who think that they have maybe missed the boat, yes, the headlines are everywhere. We can't avoid them. We're seeing it on the CP24 ticker. Gold is hitting all-time highs, silver too. You may be hesitant to jump into this market, perhaps, but where we're headed is much, much higher. We're going to talk about that.
Jerry, I want to, we started off the show talking about, crooked chaos, corrupted Canada. And we've been seeing these things about home invasions, unfortunately, and it's reaching a dangerous point. It might not be a good idea to actually store your physical product at home right now. Mm-hmm. And we do offer physical storage at Brinks, fully secure, fully insured. You have access to your product anytime, so you can schedule to take delivery if you've changed your mind down, at some point down the road, or just a change of strategy. But it might be a good idea to protect your assets, right? As much as you're protecting your family. I mean, my God, the chief of police somewhere was saying, just let it happen.
Yeah.
Don't protect your kids. Just
stand down. The best thing to do is stand down.
Yeah, and everybody's retweeting this guy doing this, and it's just like, resign. You're incompetent. You're clearly incompetent. You are on your own with your wealth. You're on your own with your security, and maybe it's not such a good idea to have your product at home right now. Mm-hmm. And whether you put it in a safety deposit box, that's cool too. But you might want to just think about a depository account where your product is fully allocated, fully segregated. You can buy and sell on a phone call. We'll talk to us about finance facilities. That's a potential down the road as well, because these are tier one capital, right?
Collateral, yeah.
So it could definitely make sense. You want to secure your wealth, protect your family, be independent. It's time for that. Anyway, yeah. I just wanted to say that because you were talking about those things and it was just on my mind.
No, we can't avoid talking about this. This is obviously front and center on all Canadians' mind. We're just seeing Canada just slip through the cracks, it seems, but I want to remain hopeful and just encourage people. You're looking for that rebate for what's been taken from you, from what's threatening your wealth, what's threatening your livelihood. This is one key, one avenue that you can take. This is a pivotal time to make a move outside of the traditional banking system into metals that have the top side potential and performance that it will deliver for you, so you can pay off your mortgage. You can buy a house outright cash. This is where this market is just going to transform lives. This is what we want for at Guildhall. We want to transform your life. We're not just here to protect your wealth. Yeah, it's part of that. It is your insurance policy, but we want to see you thrive, not just survive. This is a time to position, because the history of gold cycle shows that we are in the third cycle that is about to hockey stick higher. Where we saw the two previous cycles, we saw gold perform approximately 1,400% from the bottom to the top. The third cycle began in 2016. It's a 10-year cycle. So by 2026, we should have from the low of 1,050 gold back in 2016 to a high that'll put gold at around 14,000 US per ounce. And if you go back to a 30-to-1 silver to gold ratio, that puts silver at around 400, 500 US per ounce. And if you could just get your hands on 2,000 ounces of silver, like you did in 1980, you can buy a home. You could buy a home, pay off the mortgage, cut those debt strings off of your life, off of your children's life, and position for freedom. It's all about freedom. That's what we want to encourage, is some peace of mind, freedom, and precious metals is a key to that. It's a source of wealth, and it's a source for, moves. You're never cornered in precious metals. But I agree, Jeremy. I think the time is to think about some storage facilities, utilize Guildhall, give us a chat, give us a call, and we could help facilitate storage and record keeping of what you have in storage.
Yeah, and listen, also the government taxes you out the wazoo. Consider putting physical precious metals in a TFSA. If you're getting a great run in the market, timing looks good, and you're getting 40% gains in a market, which, hey, could go up another 3 times from here. I would want to protect insulate myself from the tax man in
Always
that respect.
They're always knocking.
So we help clients to own their actual physical gold and silver in a TFSA. And again, if you want to deregister the product, take delivery, you can do that too. If you've missed a show, please follow us on YouTube. Check us out on Rumble. We're also on Spotify. And again, follow us on X. We love to have you part of our weekly conversations there. Jerry, thank you so much for your time, and thank you to all the listeners for joining us this week on The Real Money Show. Can't wait to speak to you next week on 640 Toronto.